If you use a standard bank account in the United States and you ever transfer money using digital apps like Zelle, Venmo, CashApp, or even standard bank wire transfers to family members, you need to listen very carefully to what I am about to tell you. Because starting next week, a newly upgraded federal algorithmic monitoring system is going completely active across the entire American banking network. And what it is designed to do is going to catch millions of ordinary, honest Americans completely off guard. We are not talking about warning letters in the mail. We are not talking about a polite phone call from your local bank branch manager asking you to verify a transaction. We are talking about automated, instant account freezes. Freezes that lock you out of your primary checking account, your savings account, and your ability to pay your mortgage, buy groceries, or access your own hard-earned money. And the most terrifying part of this new reality is that this system does not require a human being to suspect you of a crime. It relies entirely on automated artificial intelligence triggers. Over the last several years, the federal government and regulatory banking authorities have been quietly expanding their surveillance over digital peer-to-peer transactions. You might remember the intense public debate a few years ago regarding the reporting threshold for payment apps, where the government wanted visibility into any account receiving more than $600, while the public and politicians argued loudly over those specific tax reporting rules. The actual banking regulatory authorities were behind closed doors implementing something far more powerful, far more immediate, and far more dangerous to everyday citizens. It is an algorithmic framework known as the Enhanced Suspicious Activity Protocol, and it uses predictive machine learning to monitor every single dollar moving in and out of your personal accounts in real time. The publicly stated goal of this technology is to stop massive money laundering operations, international wire fraud, and coordinated digital scams. That is what the press releases say. But that is not what the technology is actually doing on the ground. The trap that is currently closing around everyday Americans is that these banking algorithms do not understand context. They only understand rigid patterns. And the patterns of normal, everyday family life often look exactly like the patterns of financial crimes to an unfeeling digital system. You might be transferring $2,000 to your adult daughter to help her with a college tuition payment. You might be paying a local contractor $3,500 in 2 separate installments for fixing your roof after a storm. You might be splitting a family vacation rental, pooling money with your siblings to cover the initial deposit. For decades, these were private transactions. It was your money, you paid taxes on it, and you could move it how you saw fit. In 2026, every single one of those digital transactions is run through a federal risk scoring algorithm before the money is actually allowed to settle. If your transaction trips the algorithm, the system automatically generates what is called a Suspicious Activity Report, or SAR. But unlike in the past, where a human compliance officer would review the SAR and likely dismiss it as a harmless family transfer, the new protocol instantly restricts the account pending a full verification audit. Let me tell you exactly how this plays out so you understand that this is not a theoretical warning. Consider the case of Robert and Martha Henderson, a retired couple living in Michigan. Robert had been saving money in a secondary savings account for over a year to buy a used vehicle for his grandson, who had just graduated high school. When the time came, Robert used his bank's online portal to transfer $4,500 directly to his grandson's checking account at a different banking institution. The transaction was flagged immediately. Because the grandson's account had only recently been opened, and because Robert had not previously made transfers of that size to that specific routing number, the AI system categorized the movement as a high-risk anomaly indicative of elder exploitation. The system did not just stop the transfer. It locked Robert's entire online banking profile. When he went to the grocery store the next morning to buy food, his debit card was declined at the register. When he called the bank's customer service line, he was not allowed to speak to his local branch manager. He was routed to a central fraud department where a representative read from a script, telling him his accounts were under administrative review, and they could not provide a timeline for resolution. Robert and Martha were locked out of their own pension deposits, their Social Security funds, and their primary checking account for 14 agonizing days while they submitted notarized letters, birth certificates, and sworn statements proving that Robert was simply giving a graduation gift to his own flesh and blood. There are 3 specific algorithmic triggers going fully active next week that you must be aware of right now if you want to protect your accounts from being automatically frozen. The first is what compliance officers refer to as the velocity and frequency trap. The algorithm does not just look at how much money you are sending, it evaluates how fast and how often the money is moving. If you make 3 or 4 separate transfers within a 48-hour period, even if the total combined amount is relatively small, the system treats this as an extreme red flag. Why? Because criminals often break up stolen funds into smaller, rapid-fire transactions to evade federal reporting limits. But think about your own daily life. Have you ever paid your landscaper on a Friday afternoon, reimbursed your friend for dinner on Saturday night, and then sent money to your college-age son on Sunday morning? Under the new monitoring rules, that completely innocent weekend of normal financial activity creates a velocity pattern that can instantly flag your account for an automated freeze. The system sees rapid outflows to multiple unaffiliated parties and shuts the door to protect the assets, completely ignoring the reality of modern digital life. The second algorithmic trigger is the uncharacteristic memo trap, and this is the one catching the most people off guard. Whenever you use Venmo, Zelle, or a standard bank transfer, you almost always include a little note in the memo line. For dinner, rent, happy birthday, or sometimes an inside joke between friends. Listen to me very carefully. You must completely stop using jokes, sarcastic remarks, or vague language in your digital transfer memos. The artificial intelligence scanning these transactions is using advanced natural language processing to read millions of memo lines per second. It is specifically looking for keywords associated with illicit goods, unregulated gambling, and untaxed commercial services. If you send your friend $100 and write a sarcastic joke in the memo line, the algorithm does not have a sense of humor. It reads the flagged keyword, cross-references it with the monetary amount, and freezes the account pending a human review. Furthermore, if you are using personal accounts for side hustle business transactions, which millions of Americans do to survive in this tightening economy, and you use commercial keywords in your memo lines like invoice, consulting, or services rendered, the bank's AI will flag you for violating the terms of service of a personal checking account. They will freeze the funds, demanding that you upgrade to a fee-heavy commercial account and potentially report the income flow to federal tax authorities. The third trigger is perhaps the most insidious because it involves the behavior of the people you are sending money to. It is known inside the banking industry as Network Contagion Risk. Under the new 2026 protocols, your bank account receives a hidden internal trust score. That score is affected not just by what you do, but by the digital financial behavior of the accounts you interact with. If you send money to a family member, and that family member has a history of engaging in high-risk cryptocurrency trading, frequent overdrafts, or receiving funds from overseas, their low trust score infects your account the moment your funds touch theirs. The algorithm draws a digital web between your account and theirs. If law enforcement or the bank's fraud department decides to investigate their account, your account is automatically temporarily frozen simply by association. You become guilty by digital proximity. You could be a completely law-abiding citizen with an 800 credit score. But if you split a restaurant bill with a coworker who happens to be under algorithmic scrutiny, your ability to buy groceries the next day could be instantly revoked. This level of financial surveillance is unprecedented, and because it is entirely automated, there is no one to reason with when the freeze happens. When an algorithmic freeze happens, the fundamental presumption of innocence that Americans have relied on for over 2 centuries is turned completely upside down. You are no longer presumed innocent until proven guilty. Your money is presumed suspicious until you can provide a mountain of documentation proving it is legitimate. And the banking institutions have absolutely no financial incentive to rush this clearance process. When your account is frozen, the bank is legally protected. In fact, federal regulations shield banks from any civil liability if they freeze your account in good faith suspicion of fraudulent activity. You cannot sue them for the late fees you incur on your credit cards because your auto-pay failed. You cannot sue them for the bounced check fee on your mortgage. You cannot sue them for the emotional distress of having to borrow money from a neighbor just to feed your family. They are completely untouchable. And because they are untouchable, they will always err on the side of extreme caution. It is cheaper and safer for a bank to lock down 1,000 innocent accounts than to accidentally let one illicit transaction slip through the cracks and face a massive fine from federal regulators. You are collateral damage in a digital war you did not even know was happening. Think about the devastating implications for seniors and retirees. Many older Americans rely heavily on younger family members to help them navigate complex online portals, pay digital bills, or manage routine home maintenance. A senior might send $1,500 via Zelle to their son to buy a new water heater on their behalf because the son has a truck and can physically go to the hardware store. Under the old system, this was just a normal Tuesday. Under the new 2026 algorithmic regime, a sudden $1,500 transfer from a senior citizen's account to a younger relative triggers an immediate elder financial exploitation freeze. The bank immediately shuts down the senior's account. But it gets worse. To unfreeze the account, the bank often requires the senior citizen to physically present themselves at a branch location with 2 forms of government ID, or even worse, to complete a complex identity verification process involving taking biometric selfies with their smartphone, a technology many seniors struggle to use correctly. If they fail the digital verification, the account remains securely locked. We are seeing thousands of cases where elderly Americans are effectively locked out of the financial system because they cannot jump through the digital hoops required to prove they are who they say they are, and that they willingly sent their own money to their own child. This is not fear-mongering for views. This is the reality of the banking system you are participating in right now. The infrastructure for total digital financial control has been built, tested, and is now being activated. But you do not have to be a helpless victim of this system. There are very specific, completely legal, and highly effective steps you can take today to structure your accounts, manage your digital transfers, and protect your digital footprint so that you never trigger these algorithms in the first place. In the second half of this presentation, I am going to walk you through the exact step-by-step blueprint for safeguarding your money. I will show you the exact safe transfer limits you must not exceed, the specific memo line rules you must follow starting today, and the one crucial change you need to make to how you link your primary checking account to digital payment apps. But before we get to the solutions, you must understand the full scope of the battlefield. Now that you understand how these new AI banking algorithms operate and how easily an innocent family transfer can trigger an automatic lockdown, let's talk about the solutions. You do not have to live in fear of being locked out of your own money, but you do need to change how you manage your digital transactions starting today. There is a precise defensive strategy you can implement right now that will keep your accounts invisible to these aggressive federal monitoring systems. Step number 1 is to strictly enforce the one-and-done transaction rule for your personal accounts. The algorithm is heavily triggered by frequency, sending multiple small amounts to the same person over a short period. If you owe a family member or a contractor $1,500, do not send $500 today, $500 tomorrow, and $500 the next day thinking smaller numbers look less suspicious. That pattern looks exactly like structuring or a fraud velocity anomaly to the AI. Instead, make one single clean transaction for the full amount. If the bank prompts you with a standard security text to verify it, approve it immediately. One large transaction with proper verification is significantly safer than a rapid sequence of smaller ones that look like an automated bot trying to drain your funds. Step number 2 is to completely clean up your digital memo lines. Starting right now, treat every memo line on Zelle, Venmo, or CashApp like a legal document that a federal auditor will read. Never use inside jokes, slang, or sarcastic phrases. More importantly, if you are running a small side hustle or hobby business from a personal account, never use commercial words like invoice, payment for services, or consulting. The AI reads these keywords and instantly flags your account for commercial non-compliance, freezing your money until you pay for a premium business account. Instead, keep your memos strictly generic and personal. Use plain, undeniable words like dinner reimbursement, family gift, or shared travel expenses. Simple, boring language passes through the automated scanners without triggering a second glance. Step number 3 is the most critical structural change you can make. De-link your primary checking account from all peer-to-peer apps. Right now, most people have their primary bank account, the one where their paycheck arrives and their mortgage is paid, directly connected to Zelle or Venmo. This is a massive financial risk. If your Venmo gets flagged or your Zelle transfer triggers an algorithmic freeze, the bank doesn't just lock that app, they freeze the entire connected checking account. To protect yourself, open a secondary, completely separate checking account at a different bank, or use a basic digital-only account specifically for app transfers. Keep only a few $100s in it. When you need to send money, move it from your primary bank to to this secondary buffer account first, and then send it through the app. If the algorithm throws a tantrum and freezes the account, your primary lifelines, your mortgage autopay, your retirement funds, and your grocery money remain completely safe and untouched at your main bank. The banking landscape in 2026 demands that we shift from passive consumers to active protectors of our own financial access. The systems designed to catch criminals are now automated webs catching innocent citizens every single day. By using a buffer account, maintaining clean memo lines, avoiding rapid-fire transfers, and ensuring your mobile device authentication is fully updated, you remove yourself from the algorithmic crosshairs. Do not wait for your debit card to be declined at a cash register to take this seriously. Check your accounts today, set up a secondary buffer link this week, and change your digital transfer habits before the system changes them for you the hard way. If this video gave you the practical tools you need to protect your family's financial security, please share it immediately. Send it to your parents, your children, and anyone you know who routinely sends money online. Forewarned is forearmed. Stay safe, understand the new digital rules, and we will see you in the next alert.